For our session today on adapting to change, how the homeownership industry is evolving, we have three speakers. We'll begin with Melissa Noe, our housing program specialist from the Office of Housing Counseling. We'll also hear from Terry Redmond, Director of Counseling at Pennsylvania Housing Finance Agency. And we'll hear from La Diaz, Vice President, Housing and Financial Empowerment for Unidos US. We'll start with an overview of the Homeownership Initiative Grant Program through HUD, and then we'll hear from Lot and Terry on their grantee perspectives and related initiatives on homeownership. I'll now turn it over to Melissa Noe to provide an overview of the Homeownership Initiative Grant Program.
Hi, everyone. Thank you, Lindsay. Again, my name is Melissa Noe with the Office of Policy and Grant Administration in the Office of Housing Counseling. I'm excited to share details today of the office's brand new Homeownership Initiative Grant. When setting forth to develop the Homeownership Initiative Grant, there were several goals that we had in mind. One of our main goals was to support and lift up HUD's current strategic plan. This grant covers a few strategic plan goals from it. Goal number one of the strategic plan is to fortify support for underserved communities and support equitable community development for all people. And then goal number three of the plan is to promote homeownership opportunities, equitable access to credit for purchase and improvements, and wealth building in underserved communities. As you can see on the first slide, we designed this grant specifically in mind to award housing counseling applicants who demonstrated that their program design incorporates culturally sensitive, linguistically appropriate housing counseling. The way that OHC defined that term, culturally sensitive, linguistically appropriate housing counseling in the grant application, is housing counseling that is responsive to clients' abilities and preferred languages, cultural beliefs and practices, identities, and other aspects of diversity. It recognizes that to achieve greater equity in housing, housing counseling must promote fair housing and fair lending and be accessible, understandable, and relevant to the client as determined by the housing counseling agencies in cooperation with their clients. And as we'll talk about, the grant's focus is to increase homeownership rates among historically underserved communities through homeownership counseling. Next slide. Grant funding will be paid out using a negotiated fixed rate to grantees that provide pre-purchase counseling to households that then go on to realize homeownership and then return for post-purchase counseling. HUD hopes that these fixed rates will assist in standardizing a reasonable, fair market rate for the cost of providing homeownership counseling services across the industry. Additionally, since fixed rate agreements are occurring today in the private sector, which we'll talk about, we hope that we can point to the rates affirmed through this HUD grant for wider use in the industry. So for some details about the grant, the Notice of Funding Opportunity, what we call the NOFO, was published on March 5th, 2024. It was a long time coming, but it was finally published in March. $10 million was set aside for this grant funding. Because it's a much smaller pool of funding compared to our comprehensive housing counseling grant, we decided for this first year to limit applicant eligibility to pass-through agencies. So those are state housing finance agencies and HUD-approved intermediaries and multi-state organizations. Then on June 17th, 2024, we announced the successful applicants that received grant funding. Currently now there are 23 grantees participating, 12 intermediaries, 5 state housing finance agencies, and 6 multi-state organizations. We're still working through executing the grants and finalizing the numbers, but we're currently also seeing that about 200 branches and sub-grantees will participate in the grant through their parent network. And then finally, the period of performance for this grant extends from October 1st, 2023 through March 31st of 2025. So although we set forth to provide a fixed rate grant to housing counseling agencies, HUD is part of the federal government, meaning that we are required to abide by government-wide policies and procedures for the award and administration of grants that we administer. We developed this fixed rate model through the fixed amount award approach that is defined in 2 CFR 200.1. There's the definition there. And then with more information provided about the fixed award model approach from 200 to 201. If you want to know more about these citations, I really encourage you to look them up because there's a lot of good information that we used to develop and be the framework of the grant. We instructed grantees that their calculations of their unit rates should consider the full cost of housing counseling required to fulfill the unit requirements. We'll speak in a moment about what the unit definition is. Calculations of the unit rate must be guided by the cost principles in 2 CFR 200. And we're using those cost principles now during grant execution to analyze the grantee's unit rate proposals. Unlike the comprehensive housing counseling grant, after the financial analysis has been completed and the grantee's unit rates have been approved, accountability on fulfilling the grant requirements is based solely on performance and results. So we will not be looking at things like receipts and personnel activity reports when reviewing and approving the grant activity reports. Instead, we will be reviewing the performance data that's required to be provided to us to be paid. I'll touch on what the performance data looks like in an upcoming slide. Next slide, please. It's also worth mentioning, I've talked about a unit here over the last few slides. I put the definition of a unit on the screen. The definition of the unit that we created for this grant is a household that has successfully completed the following 3 components: pre-purchase counseling, purchase of a home and mortgage origination, and post-purchase counseling or certification that the post-purchase counseling will be completed 6 to 12 months after home purchase and mortgage origination. Just to comment quickly about including post-purchase counseling in the unit requirement, I don't think it's probably necessary to explain to anyone here. I think we all agree. Providing post-purchase counseling can extend the impact of housing counseling for families that become homeowners. And it also positions that counselor to be the trusted advisor along the homeowner's journey with anything that comes up. So we really wanted to promote that and be a requirement for this grant. And of course, post-purchase counseling can have a really positive impact on mortgage loan portfolios too. So similar to the comprehensive housing counseling grant that many of you may be used to, eligible activities that can be included in fulfilling the unit are housing counseling and group education, oversight, compliance, and quality control, supervision of counseling staff, housing counselor training and certification, and marketing and outreach. Much of the things that you see that are required when it comes to running a housing counseling program. In order for the grantees to be paid for their units completed, each grant activity report requires that the grantees submit data on the household's demographics, their mortgage information, and counseling outcomes. Some examples of the data points we're collecting are the household zip code prior to purchase and then after purchase, their mortgage loan type, loan term, the interest rate of the mortgage, if the household received down payment assistance, the amount of down payment assistance, the source of that assistance, credit score at the beginning of counseling, credit score at the end of counseling, and how many pre-purchase sessions and post-purchase sessions that household completed. We plan to engage with HUD's Office of Policy Development and Research to measure the impact of homeownership counseling through this grant. There's really an absence of meaningful data in the homeownership counseling space. We all know there is a lot of data demonstrating the strong impact that housing counseling has for sustaining homeownership, but in achieving homeownership, there are still many questions when it comes to impacts. So we are hoping that with the data and the results from this grant, we can help educate and inform the industry and also appropriators so that we can further expand homeownership counseling. And finally, before I pass it to Terry, I just want to mention we have received a lot of questions regarding if we're going to open this grant opportunity up to local housing counseling agencies in the future. We want to, but it really just depends on our upcoming yearly funding levels. So, you know, we'll obviously keep everyone informed about that, but it does have to do with like how much funding we have addition to what we usually get each year. All right, so I'm going to pass it now to Terry Redmond. She's the Director of Counseling for the Pennsylvania Housing Finance Agency, and they are one of our esteemed grantees for this grant. So I'm excited to hear from her. Thank you, Terry.
Thank you, Melissa. I'm going to jump in here because one of the things we'd like to do before Terry and Lot speak is to get a sense of who we have in the audience. So I'm quickly going to bring up Mentimeter. Folks can see now, hopefully, if you join us at menti.com, and please use the code 34258342. We already have some answers coming in. And our first question for you all to get a sense of who's with us today as Terry and Lot prepare their remarks. Are you participating in HUD's Homeownership Initiative either as an intermediary or as a subgrantee? So it looks like we've got quite a mix here. A good number of participants. Give a moment for those responses to keep coming in. You know, this is something that, as Terry and Lot will speak to, is going to have broader implications for our industry. So for those who are not participating, and as Melissa said, although there is no additional funding at the time, we are hoping to share the lessons learned and all of the research. Right. Well, it looks like it's about even as it continues to level out between folks who are participating and are not. So that's great to see. Some of this will be information that is new to you all and orient you towards the work that's being done, and some of it is hopefully familiar. Our next question before we move on is, what is your experience with fee-for-service lender agreements? Being that one of the goals of the Homeownership Initiative is to help understand better the cost of providing counseling services and how to cover those costs. We would love to know across our audience today how folks have some experience, and if it's in post-purchase, pre-purchase, and if you're receiving fees from lenders for your services. And it looks like the vast majority of our audience does not at this time have any experience with fee-for-service agreements. And you are in the right place to learn more about what that might look like. We do see, though, some folks are receiving fees for pre-purchase. We did not specify here whether that means counseling or education. We know there are a lot of different models out there, and it's good to know that there's a range of experience here. Also, some experience with post-purchase, as we know during the peak of the foreclosure crisis, and folks coming in search of counseling for loss mitigation, foreclosure prevention. There were some opportunities at that time. Good to know that there are folks out there who have been able to benefit, housing counseling agencies that have been able to benefit from providing that service. We had one more question for you all, and that is, what follow-up and/or initiatives are you offering consumers currently to engage with you after purchase, if any? So we know that part of the goal of the Homeownership Initiative grant is to continue folks, to bring them back in for that post-purchase session, to make sure we find out what happens with folks after that purchase has been completed, and to encourage sustainable long-term home ownership, and make sure folks don't fall into trouble at the back end. And one of the ways that the program, as Terry and Lot will speak to, is encouraging ways to engage folks after purchase. So it sounds like there is a large number of none as a response here. So a lot of folks were not offering incentives, but some examples we are seeing are gift cards. It looks like some folks are providing some incentives for post-purchase counseling, and follow-up emails. But for the most part, folks are interested, it sounds like, in thinking more about this because we're not currently offering any incentives. Besides potentially home care packages, that's an interesting one, free repair workshops, celebrations, surveys, gift cards, follow-up, but no incentive. Great. So I'll leave this up so folks can continue to weigh in. We just wanted to take a pulse check on the audience, and what you're currently doing with regard to fees and supporting your services, after Melissa's overview of the Homeownership Initiative grant. I'll turn it back over now to Terry, to share a little bit about their experience at PHFA with implementing the grant.
Thank you, Lindsay. And I just want to applaud the work that David Beerbaum is doing and his team to negotiate this type of opportunity for housing counseling agencies to kind of hone in on looking at the totality of the cost for counseling. I think we've been, as practitioners, trying to wrap our hands around the cost of counseling probably since I've been providing oversight over these grants for more than 20 years now. And we still really haven't gotten to a comfortable place. So I believe this initiative will allow us an opportunity to hone in on that and standardize the process. The other issue, which kind of came out in the questions, is that many of our counseling agencies have pre-purchase programs. PHFA was able to receive the grant. We have 63 housing counseling agencies in our network. 10 of them received the grant under this particular initiative. And what's exciting about this whole approach is that the 10 agencies who predominantly deal with the low and moderate income market, focusing on the Black and Brown community, but many of them do work with Latinos and specifically Asian populations. So we're able to get that cultural mix. But we've been known to provide valuable service on the pre-purchase side. It's just getting the consumer back in to work with them on the post-purchase counseling side has been a strain. Most of the time, what we see in the industry is that consumers come back only when they have a problem, when they're having a problem paying their mortgage. So I believe this initiative gives us an opportunity to collect the data that we need and to also focus in on some incentives. So I do have some agencies that already had built into their structure an opportunity to provide gift cards and other incentive to encourage individuals to come back. But as a whole, it gives us an opportunity, especially in this market, in this changing market where we're focusing on strengthening or reducing the gap between the Black and white wealth gap and the home ownership rate. We can kind of focus in and develop marketing plans, and also strengthening our post-purchase educational side of things to provide information on home preservation, weatherization, which is kind of a typical information that you would provide on the post-purchase side, but also look at appealing to individuals that might want to focus on maintaining or generating wealth in their family, and looking at real estate matters and other issues to protect the asset that they acquire. So I think timing wise, this was a great opportunity to come out with this home ownership initiative. It allows us all to be able to contribute, all that have received the grant, to contribute to the data, to provide the important data that's needed to figure out what the standard would look like in the future as we improve and attract more clients, and work with them before, during, and after the real estate transaction or the home buying experience happens. Now, I believe Lot Diaz is going to talk to us about the interesting concept of fee for service on the lender side. Very interested to hear his comments. Lot?
Thanks, Terry. Appreciate that. Wanted to say Terry's comments on the HUD Homeownership Initiative program are on spot. We've had some of the similar activities. Unidos US is one of their national intermediaries. We have in our network about 46 sub-grantees who are working with us all over the country. And in addition, we work in a couple other partnerships, probably with another 10 on some other state-based programs and stuff that given us an opportunity to see a kind of a broad swath on this. So anyway, happy to join you today. So the HOI that Melissa presented earlier, I see as HUD's latest funding opportunity is actually, for us, our observation, one of a growing number of examples of fee-for-service programs being offered by governmental and private organizations nationally. Most of us counseling organizations have participated in NeighborWorks, America's National Foreclosure Mortgage Counseling, or Housing Stability Counseling programs. Both of these were large national programs that paid for specific counseling activities for HCA's clients. A small, as the Mentimeter kind of presented, a smaller number have participated in other types of fee-for-service. One more recently that's been out there is California Housing Finance Agency's National Mortgage Settlement Program, which pays for up to two sessions per client to address housing issues. And then, as some I saw, again, from the Mentimeter, some of you have participated in fee-for-service programs with lenders that have paid for an HCA client, one of their HCA clients who applies to the partner lender for a mortgage, or in some cases, if the client closes with that partner lender in the process. There are more examples of kind of this type of thing, but I wanted to start by saying I think fee-for-service is a long history, but it's far from finished, and there's more work being done, and HUD's program is an example of that. At Unidos US, we've been trying to develop fee-for-service programs for our network for over 20 years, primarily in the pre-purchase counseling space. It has been a very elusive strategy to try to be successful with, particularly because we want to implement it in meaningful ways where the client has a better journey through the whole mortgage process. We noticed early that there was so much valuable work being done by counselors with their pre-purchase clients that rarely was applied to the client's mortgage application process. This prep work by counselors, which is to us is a form of underwriting, we saw the client repeat that same process as they started with the lender in the origination process. Creating a bridge between the HCA and a lender is and was difficult because of regulatory barriers, and as they were being interpreted by both industry and local agencies. But equally important is what we notice is the systems that housing counseling agencies and lenders use to develop their clientele, to process their client flow, if you will, are really different, and aligning them is a lot more complicated than one might expect. That said, over the years, we and other sister agencies have explored solutions to some of these issues, and some we'll talk about below. Our focus on fee-for-service, in addition to the observation I just mentioned, was driven because our partner HCA spend a lot of time and effort to prepare a client for which they get paid only partially from various grant programs supporting their work. Everything else comes from kind of general fundraising. Yet the work done with the client can be life-changing not only for the family, but is also valuable to companies and agencies providing credit to target markets. There was something a little off by that situation for us, and finding ways to solve this became a passion of our staff, and as it was always kind of part of our mind as we thought about the work with our local agencies. We all want to find a way to expand our programs, generate more impact. This is another reason why fee-for-service can be an important strategy. We have all experienced the benefits of housing counseling one way or another, but the number served is still relatively small. And if we're going to have more impact, we need resources to serve more families. We all know grant funding is a limited resource, and although we believe it's a type of funding that's absolutely crucial, long ago, we and others, I think, have thought of building fee-for-service models where agencies can earn more income and support counseling programs. They would need to really do that. They would need to kind of build a program, take a program to scale. At Unidos, we always aimed at a goal of 30% of program income to come from fee-for-service programs, as we thought that this budget percentage would add stability to a counseling program and provide strategy options. Honestly, few of our partner agencies have hit this goal, but interestingly enough, striving for it, we have begun to experience how to actually offer and operate fee-for-service programs with the hope to bring some of these models to scale as time goes on. Coming back to HUD's homeownership program, it is different, and I look to a couple reasons in particular. First, it pays for outcomes. I will come back to this a little later because it's a critical element. Secondly, it forces HCAs participating to think about, in very specific terms, how much does it cost your agencies to achieve a specific outcome for your client? In the case of the Homeownership Initiative, what is the cost of a pre-purchase client of yours that results in a pre-purchase of a home and also creates the opportunity to provide post-purchase counseling to ensure guidance provided previously was understood and applied? Such services provided to a client are not revolutionary, but putting a price on this outcome is, and we're hoping the data collected will be very revealing. From my perspective, there will be more of this type of funding models rather than less going forward, because it is impossible for an agency or company wanting to work with your HCA, or maybe your agency wants to work for them, to understand your cost structure to provide the service, provide services for an outcomes they are interested in. These potential partners can assess the value of an outcome they are interested because it's usually tied to a product or service. And the idea is that finding some way to effectively have that interaction is really a key piece, but it's a negotiated piece of fee-for-service. Unidos US and our partner agencies have participated and tried to create fee-for-service programs with housing finance agencies, housing trust fund programs, the GSEs, lenders of all types, including mortgage, small installment loan lenders, and even student loan providers. One conclusion we have reached is that the willingness for a partnership is there, but partners can see, and because they can see the mutual benefit of their clientele to have access to HCA services. But we also noticed this willingness creates program design problems in the fact that they want to demonstrate outcomes for the services, because it's really the outcomes that they're trying to get with when they contract. And so it was always a major part of the discussion. As fee-for-service partnerships are negotiated, we observed that it's not necessarily easily develop a program and pricing model that works for both the HCA and the potential partner. Potential partner and agency, whether it be agencies or companies, have limited resources just as HCAs do. And it's really the art of designing that program where HCA partners can get enough what they want, and the partner you're working with gets the outcome they need, both from not only an outcome perspective, but from a cost perspective. And that's not always the easiest thing to do. Identifying issues like identifying an efficient client flow, working with a particular partner that maximizes the number of families that you can serve, using technology to support communications and other program efficiencies, as well as the quality of service your agency is providing. All of these issues become more critical when you're considering fee-for-service. This is another reason why I think the Homeownership Initiative HUD has launched is so important. As I mentioned, it requires establishing a price for an outcome, which has traditionally, at least from our experience, been really hard for our partner agencies to do. But it is the focus on the outcomes that most fee-for-service partners are interested in. And over the years, we've had the opportunity to discuss quite a few of these, and they're not all the same, by the way. It's not like just everybody wants two things. It's not just that you're providing services to a mutual client, which is kind of embedded in the idea, but they want to be able to assess the value of the service and set some markers of outcome illustrating this progress. And at least for the pre-purchase counseling service line, Homeownership Initiative is going to start to find not only a market value for this type of outcome, but also the cost factors that are driving it. So it's going to be really valuable information. I want to kind of just add a little bit on kind of the importance of fee-for-service and then end with an example. Fee-for-service pilot, we've been developed for a couple of years. There's called the Homeownership Partnership Integration Initiative. I may have spoke to some of you on this topic earlier. It includes a few intermediaries, including, for instance, us, National Urban League, Housing Partnership Network, National Foundation for Credit Counseling, NeighborWorks, GreenPath, Home Free, Housing Action Illinois, to name a few that have been participating over the months. But it started many months ago where we outlined a potential way to we could work with mortgage lenders that would be more of a standard process that all agencies could look to as they think of pre-purchase partnerships with a local lender. We aligned during this process with OCC's Project REAch, and started to developing a pilot to offer pre-purchase counseling services to denials of these banks that and to make an offer of more support. The intermediaries mentioned have participated. We're in this process. We're Fifth Third Bank, Wells Fargo, and Citi, which was really critical because they lent a lot of staff time to address all the regulatory, legal, and process issues to launch something like this. Now we're close to launch, and we hope that this kind of project, along with the Homeownership Initiative, will kind of provide another model for HCAs to look at as they're contemplating fee-for-services for their programs for their organization or participating in them. One of the things I'd maybe kind of look to close on is by saying that fee-for-service approaches are not essential, right? Housing counseling agencies can continue to operate as they are, because I think it's a service that many both private and public partners want to make available. But we also believe unless we feel like unless you really, if you want to grow the impact of our program, or in our case, our program collectively with our partners, we need to generate resources to do that beyond what we're generating today. And so we are in a kind of an industry, a housing counseling industry that works with other industries, whether they're mortgage lenders or other types of lenders, could be state agencies wanting to get programs out, a variety of other partners who and that we would like our clients to work with because we want the best outcome for our client. I think it's critical if we need to find more effective ways to work with these types of partners beyond a grant request. Although again, not underestimating that, that's always helpful. But I think if we don't find some solutions in this area, it will always kind of limit the impact that HCAs will have on the economic life of the clients that we do and can potentially serve in the future. I'll end with kind of saying this fee-for-service issue is complex. And I think that's why the pilots and models that are coming out are really critical to provide guidance and rules of the road, so to speak, as each agencies out there want to identify a way to move forward. And I think I know from our standpoint, we are going to be pushing as much information out there as we can as it's ready to be consumed. And because I think I can speak for our agency, we believe getting more counseling out there is a critical factor. We also know we live in a limited resource world. Really, the question is, can we align our delivery systems with other partners in a way where not only do our programs benefit from some revenue potential, maybe some client inflow from particular partners, but the partners that we're working with will they'll offer a more complete service to the customers that they're serving. I think it's a win-win if it can be done, but I will say it is not simple, and most of you probably are kind of wondering, how do you get started? And the issue of how to get started is really practice in some format, any way you can do it, because the issue is like it's really exercising a muscle that is not one that we've typically, on average, exercised a lot. Just the final word is that we're trying to develop a training on this through our ULA, just to give people some new tools and structures to kind of be thinking about this more effectively. Others may do a similar thing. The idea here is you're having a couple models starting to emerge. And the key, what I don't want to happen, which has happened in the past, is information stays insular to the world in which those partners are working. I think that has slowed the progress of all this work over the years. So we've been committed to pushing. If we have information, if we have models, we have samples, we have this, we're committed to pushing that out broadly as we can, because I think that's the only way we're going to generate enough activity in the market amongst us all and our partner lenders and state partners, whoever it may be, if there's just enough examples that people can point to saying this is how it's done. Mm-hmm. So anyway, I'll end with that. And Lindsay, I'll pass it back to you.
Thank you a lot. We're covering a lot of ground here, and I know, and we can tell from the Mentimeter that folks are very curious and wanting to know more about this, both the Homeownership Initiative and HUD's efforts to create new opportunities and learn more about how we can do more in this space, and the practical aspects. So one of the questions, as we're allowing folks, please to ask your questions in the Q&A in the event, for both Lod and Terry, and also Melissa, is, we know there's a lot of nuance that goes into determining what the fee should be when you're setting a fee for your service, whether it's a fee you're going to charge a client or going to charge a lender, or a fee that you're determining based on the fixed cost reimbursement model that the homeownership initiative grant is based off of. So we know there's probably a lot of variability geographically or based on the size of your agency, the market where you operate. Can you provide some examples of some of the specific things that you all have looked at, either separately for fee-for-service agreements or specifically as part of the homeownership initiative, the factors or the line items that went into determining what your costs are? And I'll start with you, Lod, and then Terry, would love to hear from you and Melissa as well.
Sure, great. Our model is a labor-based model, so we put our costs for labor, including benefits and all that, as when we were pricing it for the services that we provide, and then we added to that the infrastructure, what kind of program infrastructure costs, which is like IT, rent, operating costs that you would normally think about that. And then we also added profit because we knew we're going to have to invest in stuff. And so we took all that and believe it or not, took it down to a minute by staff person. So a counselor, a supervisor is this, a counselor is this, an intake is this. And then when we price a service, we look at how many minutes it's going to take to serve a particular client in a particular way. So it developed a pretty modular way like if let's say we had a small installment lender who just wants us to, if a person that they can't serve, they want to encourage them to come to us to get financial coaching, right? Well, it's not necessarily a long-term service, so but they want to make sure they have resources available. So its duration would be shorter, would include a financial coach, maybe an intake. And those minutes that they spend is how we got to a pricing model, right? So that's how we did it. And what we did with our network when we went through HOI through the Homeownership Initiative is that we provided that model sample. They didn't have to use it, but if they were looking for something, the way in which they can price their service, their costs in their particular market, we offered that as a way for them to do it. So it's still you got quite a broad range still with that. I mean, and I think it's because, and we haven't had enough time to really think through the assumption differences because we had 19 agencies who applied and are part of our grant. So the thing is, we're eventually going to kind of do some kind of more try to gain more understanding on the differentials. But what we also noticed that the higher cost agencies were also our higher producers. So I don't know if that correlation is anything more than just a kind of a happenstance based on who we talk to, but it's one of those things we want to tease out because I think it's important it's just important to understand as we're pursuing fee-for-service strategies with other partners.
Mm-hmm. So in Pennsylvania, basically what we did was we looked at the eligible cost that was dictated in the RFP and allowed the grantees to come up with their own costs based on salaries and fringe, what it costs to facilitate a workshop. We took in consideration oversight, compliance, and quality control. Staff training was a good part of what we were looking at. Marketing and outreach to actually, get the clients in. Supplies, case management, of course, and indirect costs. We are, and that produced a wide range of costs between the various agencies. And I can share that it was between $500 a unit to complete the actual transaction between pre and post counseling to upwards of $2,500. So I think what we're going to do now is, and I insisted that we actually average that rate out to build and come up with a negotiated rate to bill or draw down on the grant But what we're going to do in Pennsylvania is provide the actual cost per agency that was stated. Now, to further complicate the situation, we are looking to standardize that the eligibility, the terms of the negotiated rate, so that each agency is looking at the cost in a similar fashion. And to Lot's point, I mean, you've got to consider the time that it takes to provide traditional counseling, where you are including opportunity to educate a borrower on the pre-purchase side, provide credit and budget and pre-purchase counseling thoroughly, the time it takes to complete the data that's required and gathering that data, which is not normally what happens as a course of doing business in a normal pre-purchase, post-purchase transaction. But we need the data to look at the improvement and to also provide the necessary information, whether it's through attracting consumers back through incentives and or consumer information. We really got to hone in on providing some sound educational materials that would engage the client, and so that they would want to come back and work with a counselor on the post-purchase side. So there's a lot that goes into trying to hone in on cost, and we're trying to get to it. And I think this initiative kind of gets us closer to thinking more collectively, and to provide a standard for that calculation.
Great. Thanks, Terry. Melissa, anything you want to add? We have a good number of questions coming in before we move on to the next question. I see you're on mute, Melissa.
Thank you. I just appreciate hearing their approaches, because it's not an easy thing to do with a network that could be in just completely different costs, different like program models. How do you aggregate that stuff? So for us to push this and get our network agencies to do it, like Terry was just saying, this is going to help in the future to be able to improve and do it more.
One of the things, people seem to be curious about, and I'm curious, Melissa, if based on what the sort of thinking that went into doing this initiative, and Lot and Terry as well, would you say it's common for agencies to have fee-for-service agreements for counseling with lenders, or I think Lot spoke to the fact that we want to increase sustainability for our industry, but what kind of information do we have about what people are currently doing when it comes to lender fee-for-service agreements?
I think there's more happening in the loss space, like post-purchase space, but not as much in pre-purchase. And like Lot mentioned quickly, there is regulatory factors that limit us from lenders and housing counseling agencies of wanting to have that appetite to be able to get in that type of relationship. But fortunately, last year the CFPB did affirm. Previously, HUD was handling the regulatory oversight of the Real Estate Settlement Procedures Act, and there was something in there stating that funding provided from lenders to housing counseling agencies won't be considered as like a kickback. But then that regulation, like the CFPB ended up, they became the regulatory agency to provide oversight for RESPA. And so there was a lot of questions for years, and RESPA or CFPB last year just published a statement saying that they affirmed the way that HUD originally interpreted that rule. So that has helped, I think. And I think Lot probably has a lot more information about this, and I'd like to hear his opinion too, but that definitely helped on our side to be able to feel like we could do this.
We will share that link as well in the resources to the statement that was issued that affirms
Thank
the
you. Yeah.
CFPB's clarity on fee for service. Go ahead.
Can I just add something to that? I think first of all, I think that Melissa's description is just right. And the practical thing is the way I look at lenders are still everybody's law firm went through a different era of law school. So they're not necessarily all in agreement with everything that's being said at any one point in time. It just takes praxis to really set that same thing. And that's why the HPII example I gave is an important one, because it provides a real praxis point with major lenders of actually confronting this beast called the regulatory barriers and finding a solution to them. And so I think, anyway, but the description that Melissa is right. And I think progress has been made. I think there's been, it's easier now. It's definitely easier now than it was 4 years ago. And I think, but again, at the end of the day, it's praxis. And that's why as much of it, as many who can engage and try to engage in it based on models is going to be really important.
Yeah.
I would just like to also add, when Lot was talking about developing these natural partnerships, and instead of going after the money, kind of developing these natural partnerships that make sense. So, you know, I err on the side of caution. So, you know, when you're dealing with lenders and you're looking for fees, you know, I'd like to see our counseling agencies develop, and some of them are, as it relates to this particular initiative, working with existing lenders in counties that have down payment closing cost assistance programs, CDFIs, but really honing in on or trying to develop an opportunity to work with clients that aren't buyer ready, and to get those referrals, and then be able to send them back, you know. So and that would be kind of a natural thing if the lender refer the client to you. You do have to provide information on different and a variety of programs, but you can alert the lender, you know, that you're done with counseling, and have that communication where they can then follow up. So something as natural as that would be kind of safe, and you could receive the fee for service and kind of move on, and not be so concerned about being brought or bribed, which is what the RESPA regulations are prohibiting.
More on that point, Terry. I'm glad you brought that up, because one of the other questions that came in on the counselor agents or on the counseling agency side is, you know, the potential fear agencies might have about initiating or getting involved in these fee-for-service agreements in terms of double dipping, or what the implications are if you're getting paid by a lender to provide a counseling service and you're potentially getting paid, you know, through your HUD grant or through other sources. So can you say more about, you know, how you've thought about and how you all have navigated? I'll start with you, Terry, and then we'd love to hear from Lot and Melissa also on the regulatory and you know, the requirements around being careful about tracking your fee sources. But yeah, how you all have sort of thought about how you differentiate and make sure you're avoiding that sort of specter of double dipping.
So in Pennsylvania, we have a unique opportunity, is that we have an ability to attract federal dollars from the NeighborWorks and HUD, but we also get funding for counseling through our board set aside, which is actually a fee for service program, which I actually prefer rather than cost allocation. So we've been working in this space and providing technical assistance to our agencies to kind of blend the funding coming from HUD and the other two funding sources for quite some time. It is a challenge, but there are agencies, even in our state, that are still working in silos. Find it very difficult to understand how to apply a fee-for-service program and a cost allocation program. And typically it has to be, the work that we're doing here, tying in an opportunity to kind of look at what the cost is, I think it changes the perspective for agencies in terms of how they manage and utilize and attract additional funding. Okay, so it's not easy. We do provide technical assistance. I do have a senior business development officer that spends most of her time working with agencies to help them understand and looking at stages of a client. So, the opportunity for counselors to understand where that client fits into the stage of pre-purchase is really the trigger to understanding how to utilize services. So for instance, we recommend that if a client is a long-term client or in the tier 3 and tier 4 category where they're 12 months or so out from purchase, they utilize the HUD dollars, okay? And then when they get close to maybe 6 months out of purchase, then you use a fee-for-service program. So that's probably on the pre-purchase side the best way to think about this. On the post-purchase side, we're still gaining experience. I think this program will help us understand because, again, as I said, most of our clients don't come back until they're delinquent, and then of course that's a specific service. And if we do have funding, like from NeighborWorks or some type of foreclosure intervention program, we operate that accordingly, similar to the pre-purchase example I provided to you.
Thanks, Terry. Anything you want to add to that, Lot? In our last
yeah, just to me, it's a CMS problem. A CMS, I mean, they most of them can track funding sources, but now we're gonna have to track amounts, right?
Mm-hmm.
And so we put it in front of our CMS provider. But I think in the interim, so like for instance, let's say your negotiated price is $1,500 on Homeownership Initiative, and how many of those are going to get there, we don't know. So there's this weird example that Terry was saying, we use other grant funding until that person, and then we fund that.
Mm-hmm.
So there's kind of this awkwardness to this process that's not quite been flushed out. But no matter what it is, we have fee-for-service program going, like at least 3 of them. And the issue becomes is we do want to play more than our negotiated rate. So the question is, how do we track all that? The answer to that is the only logical way to that is through the CMS. But I think it's going to be so we're pushing, and therefore we could have like a client record. Fees were earned on this client, and it was up to this amount, right? So anyway, so it's kind of it's an ongoing issue that we're going to muddle through for a year or two. But what we're doing is kind of like what Terry was saying. We're highlighting to our agencies to be mindful of that. And it's not so prevalent. There's going to be thousands of clients going through these programs tomorrow, but there is a way. We have to muddle through and find a way to track.
Mm-hmm.
Absolutely. Well, that's a great thing. I think we'll have to close on that because we know there's lots more questions on model fee-for-service arrangements and lots of areas for us to follow up on and open the can of worms on the practical aspects of doing this work. So I want to thank you all for your contributions today. You'll find the resources in CVent, grant award information about the Homeownership Initiative, and we will be taking this back to HUD and thinking about more ways we can support you all in your efforts to build out fee-for-service opportunities. So we have a few more sessions left today. starting at 3 o'clock. You have 2 concurrent sessions to choose from, one on the intersection of financial education and housing counseling, and another on counseling services for Housing Choice Voucher Program clients. And then at 4:30, we'll reconvene for our main session on balancing the professional demands of housing counselors. So we want to thank you all again for joining today, and to our speakers on this exciting topic. And for any of your additional questions, you can find us through the HUD Exchange and on CVent as the conference is still running, and appreciate the time and your ongoing participation. So take care, everyone. We'll see you soon.